Hello everyone, thank you for joining me. In this video I will be reviewing a long trade I recently executed. So starting with the 1 hour chart, let's analyze the price movement. The price broke obviously above the 42.40 zone, a breakout that clearly aligns with the upper boundary or resistance level of this sideways channel. After this move, the chart displays a consistent and stair-stepping, if you will, rise in price, which was further boosted by this significant demand bar, resulting in a series of higher highs. It is important to note here that analyzing the impact of price breakouts on any market is a complex and I would say multifaceted process, requiring traders to consider both short-term and long-term factors carefully. And the reason I'm saying this is because when it comes to breakouts, the probability of successful entries depends on several technical elements and market dynamics, such as the size of the breakout, supply and demand, market conditions, and obviously market volatility. And now keep in mind, guys, that entering the market long isn't a necessary action merely because of a price breakout. Now, this isn't to say you shouldn't take advantage of a breakout opportunity when you see one. If you have confirmation, you most definitely should go for it. But again, it's important to consider a range of factors before pulling the trigger on such types of trades. Getting back to discussing the approach behind my entry, after reaching a new intraday high here, the price obviously reversed and began to fluctuate within the highlighted range. As you can see in the chart, during this time, the price repeatedly tested and stayed within the support at the 42.73 level. Obviously, the significance of this key level kept increasing with the number of times it was tested. And what this basically tells me is that smart money have increased their operation volume and have shown a good deal of interest at this particular area. Additionally, this price level becomes an even stronger point of interest for me following the formation of this large green candle, which seemed to indicate that the bulls were rejecting lower prices. I'd like to point out here that this price movement in tandem with a roughly 20-point market pullback helped me filter out the relevant technical information to find key entry levels within my point of interest. Obviously, we need to switch to a 1-minute time frame for a more refined and better understanding of the overall structure of this trade. But as I just mentioned, the advance of this demand bar and the immediate price pullback that followed led me to believe that money was moving in, not out of this trading range. Remember, guys, market corrections or price pullbacks can give us helpful information on the market's bias or direction and identify high probability trades. The strategy here is to look out for short-term dips or oversold signals during an uptrend, and to use bullish continuation patterns to hitch that high probability ride. With that said, let's switch now to a 1-minute time frame. The chart, as you can see, shows that the market went down by around 20 points after reaching a high of 42.93 and hit a low of 42.75. Then it formed a double bottom price reversal pattern, stabilized, and began to rebound as it broke structure right over here. Obviously, it would have been better to enter the trade below the 42.75 level, but I was concerned about missing out on the opportunity, which is why I placed the trade at a different price point. I was certainly fortunate with stop loss for this entry.
Target filled.
Alright gang, this does it for this video. If you like the content, please, I would appreciate if you take 2 seconds of your time to leave a like and subscribe. With that said, thanks again for watching, and as always, I'll catch you all in the next one.
Target filled.